Okay. Hey everyone, welcome to the PropLinq AI podcast, where we explore the intersection of innovation technology growth within the real estate industry. My name is Stuart Quintal, and I'm the founder of PropLinq AI, where we help real estate businesses stop leaking leads and also start scaling with smart AI tools and workflows. Now, today I'm excited to be joined by somebody doing something truly disruptive work in the property space. I'm joined with Christion Sadler, the CEO of PREIshare, and he's based in Utah. So I'd like to welcome you, Christion, to the podcast. Firstly, let's just start, tell us a bit about you and your role within the business, as well as what your business does.
Absolutely. Yeah, thanks for having me here, Stuart. So PREIshare really is a platform for real estate secondaries. And many people don't realize what that is. But if you think about any other industry out there, you probably understand what the secondaries market is. So maybe a founder of a company has, early stage shares and they need a place to sell that. They usually go to a secondaries market to do so. In passive real estate investing, there really has never been a secondaries platform, a place where you can go list your shares in existing real estate syndications. In fact, for the most part, even the way the documents were written, it tells you as a passive investor that you're investing in real estate and that it is not a liquid investment. And the truth is, if you're investing in a real estate syndication, you're actually buying ownership in the company, and the company is buying the real estate. So that's just like owning any other part of a company or a stock. It's just usually an unregistered security falling under Regulation D. So that is something that you own and something that can be sold. It's just that oftentimes the operators didn't want to have the obligation to essentially give you that money back. And it's very difficult for them to do if that money is in a transaction. It's natural for them to just say it's not an option because that solves that issue. But the truth is, there are other people out there that are looking for good opportunities and would be happy to buy your position in an existing syndication that is closer to an exit. And so that's what we've created. And I talk about all of this not from the firsthand standpoint of being the passive investor my entire life. I was mostly an active investor. I've been flipping properties and doing real estate investment for 20 years. But my co-founder, Michael Anderson, was a real estate syndicator, did over $7 billion worth of deal flow, and sold his last company with over $1 billion in assets under management. And he's really the one that realized after retiring out of the business that there were some issues with that business and alignment between him and his clients who were the passive investors. And he wanted to resolve that, not just for his internal businesses, but for the industry wide, because we believe that this is by creating more liquidity in real estate, it's going to make it a safer investment. It's going to make that more of an exciting investment for people to get into. And on top of that, it'll probably lower the cost of equity for those of you who are real estate operators overall when you can offer the liquidity factor. So that's what PREIshare is solving. And I will say that in the midst of that, what we realized is we're pretty good at connecting with passive accredited investors that are looking for great opportunities. So we do have select sponsors that we will help them with their capital raise from a marketing standpoint of helping them connect with those passive accredited investors that are looking for new passive opportunities. So that's the platform as a whole. That's what we've created thus far, and excited about the future.
I mean, it's like a fantastic story right there. Just in terms of our listeners, what's, I guess, an average deal size, I guess, so people understand what sort of, from an investment perspective, what's the average deal size, but also what's the minimum and also what's the maximum that you're offering to investors?
Yeah, and that's a great question, because typically in a real estate syndication, it's all subject to what the sponsor decides to put out there. So some of them have minimum investments around $50,000. That's probably what I've seen the majority of, but some of them have minimum investments of $100,000, $500,000 or more. When we look at the track record of Michael Anderson, for example, and everything that he did, if you look at some of our larger platform sponsors, guys that have $300, $400, $500 million in assets under management or more, I'd say their average investment overall, when you take the smaller $50,000 investments and then the multi-million-dollar investments, is probably somewhere between $150,000 to $300,000. So usually if you have that position, again, it's not something that you can really bring to an institution and ask them to buy you out, but it's also not small enough that you can just, turn around and sell it on an app, so to speak. And so it really is those private investors. Typically, I guess to add to that is, you're going to need to meet a certain requirement in order to participate in most Reg D offerings, which is accredited investor. And so typically you're dealing with people who are accredited investors that are either buying or selling these positions.
Now with that, like to bring liquidity into the market, so from an investment perspective, like are people looking to do short term, or is it still being, property is generally, like people look at property as being a long-term investment, but you're providing liquidity to the market. Are people able to jump in and out of those syndicates when and if they choose to, if circumstances changes with their portfolio?
Yeah, I would say typically real estate is still a long-term investment. If you look at the average cycle of a multifamily or a storage facility investment, for example, you're probably somewhere around 3 to 5 years. And realistically, the sponsors would love to keep those long-term. The best investment is those investments that you can essentially set it and not forget it, but continue to hold it long-term. Unfortunately, many operators are having to sell good cash flowing properties because they set a timeline with their investors that they would cash them out at a certain point in time. So again, this liquidity factor offers the opportunity potentially for those operators to hold those properties long term.
Okay. Thanks for those answers there. Now, from a growth perspective, your business is now 3 years old. How have you approached growth and scaling over the last 3 years?
Yeah, I think a lot of the initial time frame was actually a refinement of what our business model actually is, how we fit in the market, the ways that we really want to approach the solve to this problem. There's many things from our original thesis that it's pretty amazing to look back on and say, this is exactly what we said we were creating from the very beginning. But, some of the nuances of how and what has changed. But what we have seen extreme growth in is, the adoption of this idea of secondaries and the people that are willing to allow it within their offerings, and our database of passive accredited investors that want to participate in real estate offerings that allow for that liquidity. So we've grown a database of thousands of accredited investors, and we also have hundreds of sponsors that are adopting this idea. So growth is definitely happening.
So there's some great insights that you've just shared there around your customers and the investor approach. But how, from a growth perspective, how have you approached the technology that you're using to help you scale over the years?
Yeah, well, that's the interesting thing, Stuart, is we didn't realize that we were a technology company until we were already a technology company. And I think the world that we live in, things are moving so fast and it is so digitally based that everybody should probably look at that from an early standpoint. Is in some aspect or another, you probably are a technology company. And so it's good to look at what are those resources that are going to be able to help you that already exist, and what are the things that you're going to need to build. I think there was a lot of things that we thought we could buy off the shelf when we first started, that we realized that we had to build internally because they were so niche to our business. But then there were also a lot of things that we were essentially coupling together with all of these different ways of integrating different technology. And many of those things these days can be condensed because many of the technology providers out there are creating more robust systems. And so it's been an interesting journey. I will tell you that, Stuart. If there's one thing that I wished we had from the very get-go that was better, is somebody that was more technologically based.
Okay. So from that perspective, like what is, from a tools or processes, it may be AI, it may be automation, what has made a noticeable difference to you or to your business? It can be from the start, but also more recent. And I guess if you look at a lot of things in the press, is all around how fast things are growing or how fast the pace of change is at the moment. So what are you using, and what's been working well for you?
Yeah, what an exciting time, right? To be building a business. I mean, we literally started this, 3.5 years ago, which is right around the time that OpenAI and some of these platforms that are coming out. So I think we're going to look at this as such a pivotal time in technology. And so, you think about even just from that standpoint, if we just like boil it down to the most, I don't know if it's the most popular, but it seems the most talked about out there, which is ChatGPT, and how streamlined that's made the conception of ideas and, the ways to create scripts and even our documents as we're putting together, documents and agreements within the company, how quickly you can expedite that by utilizing these AI tools that are very low cost, and even you can do it with many of the free versions that are out there. But then you think about online posting and editing and all of the things that we do. From the very beginning, we knew that we were a content company because this is a very content driven world. And so our media is a big part of what we do. And we have an incredible media team, that we work with. But I'm hearing from them almost on a daily basis, how AI is so exciting and helping them with what they're doing from that standpoint. But then you also think about like a CRM, how we engage with our customers and our database, because it's not just customers that we have to engage with. We have all these different segments of people. We have the real estate operators that we're dealing with. We have the passive investors that we're dealing with. We have, the general public. We have people like you that are wanting to talk about what we're doing in the industry and how do we segment all that out? How do we properly engage with them? And what I'm finding is, there are technologies out there that really help you do that. And we're really excited about engaging with many of the AI assistants and other things that are coming to the table. In fact, we're actually just this morning, I woke up early to send one of our team members who lives in Ireland to pay for all of his tickets and send him to the SaaSpreneur conference with a high level because we want to be at the front lines of all of the technology that's out there. And I think that we will continue to do that, is put people from our team in the rooms of the front line of how technology is.
From that perspective, are you hitting any roadblocks? I guess like there's an opportunity there, but are you hitting any roadblocks? It could be in lead generation or scaling operations or managing supply and demand side.
There's plenty of roadblocks. Yes, that's the world of business, right? Interestingly enough. And I think our biggest roadblock, again, has been that we didn't realize we were a technology company until we were already here. And then, so we went through this original thought process of that we could just buy a product off the shelf that could handle our, I'm going to call it a marketplace, even though legally this is not a marketplace, right? It's a classifieds platform. And I do that just because, the lawyers are going to want to make sure that we don't step over any lines there. But we really thought that we could just buy a, classifieds management service, that was already existing. What a horrible experience that was. Oh my gosh. And so then we brought in a fractional CTO and we dealt with that, that aspect. But, then we had to, then we went the route of actually hiring somebody to completely build our system out for us. And I can't say that any of those have worked smoothly for us as of yet. So technology is still a problem that we're addressing and working through. And I think we have some really great things in the works. Thanks to my team that has been pushing forward on that and bringing in some experts to help us build that platform. But then alongside that, trying to figure out all these technologies and how they either work together or, more importantly, can be replaced. I think what we've done more than anything over probably the last year has been scaled down the amount of different technologies that we're using because we find out that those can be encompassed in technology that we're already paying for.
From I guess understanding where the problems are, what are the performance metrics that you're focusing on, or the indicators and that can be like your business, but also business metrics, but also then technology or process metrics. What are your success metrics or performance metrics that you're paying attention to most right now?
Yeah, a big part of where our focus is right now is on this aspect of the business of helping with syndicators connecting with passive accredited investors online. So we're looking at a lot of metrics from that standpoint. Every week on our operations call, we go through a very detailed list of, from Meta, how many leads came in, how many of those leads were actually accredited investors, and so on and so forth. And then you go over to Google and YouTube, and then we go over to LinkedIn and X, and we're helping people really have a omnipresent approach to their both organic and more specifically paid advertising to attract these folks. And those are a lot of the metrics that we are looking at. And then we're also, to the best of our ability. We stop at marketing because legally we're not a broker dealer. We're not co-GPing with these folks. So once we turn the lead over to our customers, that's their relationship. However, we do our best to get tracking back from them so that we know what is the quality of these leads and are our audiences really connecting? Those are a big factor for us is, the audience we're using, the messaging that we're using, and, just refining that.
From from a lead management and lead qualification, or even like lead quality perspective, when you're passing that on to your customers, like and you sort of mentioned that you're asking them to provide feedback on deal flow. How much trust and transparency is there once the lead's handed over that they provide back to you that the transparency on the quality?
Well, I think that really we're getting better over time of how to manage that and the different ways of working through it. Early on, again, we kind of fell into this side of the business. We didn't actually expect to be a marketing agency for real estate syndicators. So as we started off, and still, up until recently, the handoff is just on a Google spreadsheet, and that Google spreadsheet feeds into whatever CRM they are using, and then we have been using Go High Level through a third party for all of what we're doing. And so what we've realized at this point is it's probably time that we are the Go High Level provider, if you will, so that all those leads can seamlessly move on to our clients and they can work everything, within our own system.
Yep. Okay. From as you look ahead to the next 6 to 12 months, I mean, this business is 3 years in so far, and it sounds like there's been a lot of change or evolution towards where you are now. But what's the next 6 to 12 months look like? What are your goals for the business?
Yeah, that's a great question, and we do have amazing goals, our rocks, if you will, that we look at every single week as well. If anybody's familiar with EOS, we kind of use an adoption of that, a version of that fits within our business. But truthfully, when I look at that, what does the 6 months look like? Because things are moving so fast technologically, and the team that we're bringing on and that we're currently seeking that can implement a lot of the AI that is already available and ever changing for the better. I don't even know if I could tell you what the next 6 months looks like, but I do feel like we are right on the verge of an explosive amount of growth. And one of the things that I've really been focused on as a leader and a founder within the company is how do we make sure that everything that we're building is scalable? Because in the beginning, it was all about how does our team handle all of these tasks on behalf of our clients? And now it's how do we scale that to make sure that we can handle any amount of lead flow and deal flow that's coming our way and be able to provide an exceptional service to our clients that they can then rely on to continue to scale their business.
The rocks, the analogy of the rocks, big rocks, little rocks, and the sand. I've used that a lot over my career. I guess if you had one big rock, what's that you could solve instantly or quite quickly, what would that be?
Oh man, you're putting me on the spot because there's so many different aspects of the business that I'm paying attention to right now. I mean, just I'm going to go with what's first thing that popped into my head when you asked it, even though you can come back to me with another question the exact same way, and I would probably bring you something else. But we do have an event coming up called the Capital Raise Forum, and that's going to be August 1st through the 3rd, where we're bringing together industry leaders, capital raisers in the real estate space to talk about these changes, to bring those people who have raised billions of dollars in equity to acquire multiple billions of dollars in assets. And we're talking about the future of the industry. We're creating a collaboration of great minds where they can not only learn, but more importantly, implement those things that are going to help them scale their next business. So that rock is, we're going to max that room out at about 250 people total. That includes my staff and team. So yeah, that's one big thing that I'm focused on right now is making sure that we have 200 plus people in the room, and not just 200 plus heads, but 200 plus highly skilled and successful real estate syndicators and capital raisers.
Great. Awesome. Christion, look, this has been a great conversation. Now, before we wrap, where can people learn more about you and also PREIshare and maybe connect with you if they're interested?
Absolutely. Luckily, if you spell my name correctly, I personally am easy to find. It's just Christion with an I-O-N, so Christion, Sadler, Sadler. If you look me up online, if you spell that correctly, you're going to find me. And then PREIshare is just PREIshare. So just use the @ symbol PREIshare or the @ symbol Christion Sadler, and those are going to go directly to our site.
And the Capital Forum, what the event you're hosting, that's on, what were the dates of that again and whereabouts?
Yeah, August 21st to the 23rd. It's right here. It's near Salt Lake City, Utah. We're actually at a world-renowned racetrack out on the west deserts of Utah. It's going to be a lot of fun. We're in the private clubhouse there, and we're hosting it, right next to the racetracks. Right here in Utah. And if you just go to capitalraiseforum.com, you can find that as well.
Thanks, Christion, for joining us. And for our listeners, if you're running a property business and looking to level up with smarter AI-powered systems, check us out at PropLinq AI. Until next time, thanks for joining us.
Thanks.